Welcome back to the Liquid Math channel, where we use AI-powered market analytics for crypto investors and to those who wish to learn about crypto market analytics. As of December 12, 2025, Chainlink is trading near $13.75, while the broader crypto market remains under pressure. The Fear and Greed Index is at 26, firmly in fear, and today's tape shows heavy losses across majors like Ethereum, Solana, and Bitcoin. Yet despite this risk-off environment, Link is not collapsing, it's stabilizing, and that difference matters. Price and volume, what most people miss. Over the past month, Chainlink fell from roughly $17.24 on November 1 to $13.75 today, a decline of about 20%. But the key detail isn't the drop, it's how the selling is behaving now. On December 11, volume spiked near $860 million, marking a major redistribution event. Since then, volume has fallen sharply, with today's activity closer to $550 million. That tells us something subtle but important, and that is that selling pressure is fading, even though price hasn't surged yet. This is how markets often transition from decline into range. Now let's look at Chainlink from a few new angles. Angle number 1: the sell-off already did its damage. Chainlink's monthly low was printed near $11.76 on December 1st. Since then, price has consistently held above $13.30, even as crypto sentiment deteriorated. This is not what weak assets do in fearful markets, as weak assets keep bleeding. Link is absorbing pressure, not accelerating it. Angle number 2: relative resilience in a red market. Today's news shows clear risk-off behavior, Ethereum down 4.5%, Solana down nearly 3%, and Bitcoin down over 2%. But over the last 7 days, Chainlink is down less than 1%, holding a tight range between $13.30 and $14.96. That's a classic sign of rotation into infrastructure-style assets, not hype plays. Angle number 3: Reddit skepticism is a feature, not a bug. On Reddit, Chainlink is being openly criticized. Comments focus on the Oracle problem, skepticism around partnerships, and even broad anti-crypto sentiment. Here's the takeaway: this is not euphoric behavior. When price holds steady while public forums argue whether an asset should even exist, it usually means retail isn't chasing, and positioning is more deliberate. That's a quiet bullish ingredient, not a loud one. And now the Liquid Math Market Pulse Index, LLMPI. The Liquid Math Market Pulse Index, LMMPI, is something that I created with the help of AI, and what it does is that it scores the coin from 0 to 100 based on price structure, sentiment, macro pressure, and hidden signals. 0 to 20 is extreme risk, which means panic conditions and a high crash probability. 21 to 40 is defensive zone, means that fear dominates. And there are only high-risk setups. 41 to 60 is neutral zone, which means that the market is undecided and choppy with mixed signals. 61 to 80 is constructive zone, which means that data favors continuation. This area holds the best risk-reward ratio. 81 to 100 is overheated zone, is strong trend but growing blow-off risk. Combining price structure, volume behavior, sentiment, and macro conditions, today's LLMPI score for Chainlink is 58 out of 100. This reflects stabilizing structure after a sell-off, fearful sentiment that hasn't translated into panic, and a declining volume, suggesting consolidation, not capitulation. This is not a breakout environment, but it's no longer a breakdown either. Based on the data, the most probable scenario for Chainlink is range building, not trend acceleration. The math favors consolidation between $13.30 and $15, with downside risk toward $12 to $12.50 if liquidity briefly drains, and a bullish regime shift only if Link reclaims and holds above $15 with rising volume. Until then, patience, not prediction, is the edge. Chainlink isn't exciting right now, and that's precisely the point. This is what post-sell-off stabilization looks like when hype is gone but structure remains. This has been the Liquid Math. If you found value in this hidden signal breakdown, subscribe for more LMMPI updates and data-driven crypto analysis that cuts through the noise.